Grandpa Buffett held his famous annual meeting this weekend and he had a lot to say. And a lot of what he said has moved the market significantly. And hey, is that market manipulation? Maybe. I don't know. He gets away with it. After all, he's only just stating his opinion, just like Elon's opinion about Tesla is that the price is too high. I know they're different, but they're kind of similar. I'm sure airline stocks weren't happy about that meeting, but that's what we're going to talk about. Because Buffett might have just helped kick off the second leg down in the market, which we've been talking about for weeks now. I mean, things were already shaky, but his words didn't exactly help. So we're going to go over some of the highlights in the meeting, what he said, what he's thinking. And we're also going to talk about why you might not actually want to listen to him. I know he's the investing god that everyone worships, but you're going to see why you might just want to ignore him. But we're going to cover all of that in this video, so stay tuned. And if you're looking for stocks to buy yourself, then definitely check out our explosive stocks checklist. There's a link down below in the description and comments. No, this isn't going to find you the same stocks that Buffett invests in, but you don't actually want those stocks. You likely want something that's going to make big moves in a short period of time, especially in this type of market where it's so volatile and you kind of want to take your profits quick. But if you want to learn more about what I'm talking about, check out the checklist, link down below in the description and comments. But let's get into this meeting, and CNBC had a nice little summary for us. And I'm about to go through it just backwards because that's what I want to do. So when it comes to buybacks, Buffett says that the criticism towards them is largely uncalled for. It's very politically correct to be against buybacks now. There's a lot of crazy things being said about buybacks, but buybacks are so simple. It's a way of distributing cash to shareholders. When the conditions are right, it should be obvious to repurchase shares, and there shouldn't be the slightest taint to it any more than there is to dividends. And it's true, I don't think buybacks or dividends are inherently bad. What is bad is the time in which these companies decide to do them and the reasoning. So take Boeing, for example. Did Boeing do all those buybacks because they thought that was really the best use of the money? As if they didn't have any more research and development that they could do so they could fix their products that weren't working, their planes that were crashing, and that it didn't have anything to do with giving their executive teams bonuses because they're tied to the stock price. Can we really say that about these companies? No, probably not. We've talked about this before, but really what needs to happen with our businesses and our market and our economy is that it needs to become more long-term focused, instead of what we have now, which is very short-term focused with a lot of debt involved. Short-term focus with a lot of debt, that creates a very fragile system, which is why all these companies need bailouts now. No one has cash on hand. What I would say is after you saved a decent cash buffer so that you could weather some crazy storms, or at least partially weather them without asking for a bailout, then after you have that cash buffer, then you could pay off your dividends or do share buybacks. But even after that point, I do believe that a company should focus first on their customers and then on their employees. I don't personally care about the shareholder that much. Obviously Buffett does, because yeah, he's Buffett. He's all about buying good businesses, owning a piece of them, holding for the long term, etc., etc. But after that point, after you have the cash buffer, the company should be able to decide what to do. The company that continues to reinvest, okay, that's a growth company. The company that doesn't and wants to pay it out, that's still good too. It might be a good dividend play. That's my opinion about how things should be managed, but I'm sure you have your own thoughts. Put them down below. I want to read them. And the other big problem that prevents these companies from doing what I'm saying is that the whole system works against them. Because if you're a CEO that's going to save 6 months of cash, you're going to get kicked out of the company because your shareholders, this is the shareholders that are pushing all this stuff. They're going to say, hey, why aren't you giving that money back to us or investing it or doing something with it? You're being a sitting duck. No one cares about conservative companies until we get in a situation like this. Then cash flow becomes important. Otherwise, it's all about growth, growth, growth. So the whole system and all the players in it need to change. But I know that's asking a lot. Even for small businesses though, it's just so tough to keep cash on the balance sheet because you get screwed for it, even by the tax system. So say it's December, right? And you have a bunch of cash and you want to hold it into January just in case something bad happens, Well, all that cash, even if you're keeping it in your bank account, and you say it's going to be for business expenses later, you still got to pay taxes on it. And you're sitting here thinking like, what the heck? This is going to be a business expense just in the future. That's why I'm being prudent and keeping cash in my business account to weather any storm that might come. But nope, government doesn't care. They still want your money. So you end up paying taxes on money you didn't even get. It's just with the business. And I'm talking about personal taxes, depending on how you're set up. And then in the future, you get that credit for the taxes. But you can get really screwed because the more you save, the more you owe. It sucks. And hey, maybe I just don't know the accounting tricks to get around it for my small business. But why am I looking for accounting tricks. It's such a stupid system. And any of you small business owners out there know what I'm talking about. Why are we paying all these accountants so we could jump through all these hoops? It's so stupid. Just simplify the thing. I know I'm ranting, but I'm explaining why the system is so bad and why these things are screwed up. You can't be conservative even if you want to. Another thing everybody has been wondering is why Buffett hasn't bought any businesses yet, because that's normally what he does. That's what he did in 2008. He swoops in. So he basically said he's not buying anything because nothing's attractive. We have not done anything because we haven't seen anything that attractive. We are not doing anything big, obviously. We are willing to do something very big. I mean, you could come to me on Monday morning with something that involved 30, 40, or even $50 billion. And if we really like what we're seeing, we would do it. And these guys have $137 billion in cash right now, just sitting on the sidelines. Which is why everyone's wondering, Buffett, why aren't you buying when everyone's fearful, just like you always say? Well, the reason is because there's still so much uncertainty in this market. Buffett and Munger, they're smart. Sure, they have their quotes, but they're not like all these new investors jumping into the market thinking, oh, now is a great time to buy, because they're analyzing things way further than that. It's like that quote, be fearful when others are greedy and greedy when others are fearful. Yes, that's true from a broad perspective, but that doesn't mean as soon as you see someone stressing out a little bit, you buy hand over fist everything you can find. You still got to have your strategy. You still got to stick to it. You still got to do the right analysis. It sounds easy, right? That quote, to follow it, but it's not. So I've been seeing tons and tons of new investors flood into this market during one of the worst market crashes ever. And it's really strange. And I talked to my buddy Just Breathe over Minority Mindset about it too. He's seeing the same thing. And again, I think it's a lot of these guys who think that stocks are super cheap right now and you'll get a deal, which could be true. Like, I'm not saying that I know exactly where the market is going to go. I had a comment on the channel recently, a guy talking about he's a first-time investor and he tripled his account because of how massive this bear market rally has been. Now, the market may indeed keep going higher and reach new highs, and then he'll look like a genius. But what I told him is, like, first, great job. But second, what happens to a lot of investors, it happened to me, it happened to everybody I knew, is a lot of times you get lucky when you first start. You make really good money, and then all of a sudden you start thinking you're a market genius. You attribute your gains more to your own skill, which I don't know why you would have skill in something that you just started, versus just luck. And it's a common mistake. Like I said, I made it too. But what happens is that you get cocky and you start betting more, and then you start losing, and then you're scratching your head like, what the heck, I thought I understood this. And then you start revenge trading, trying to make up for those losses that you've had. And all the profits that you make disappear, and all of a sudden you lost more than what you even started with. Then you might get lucky again. So you think, oh, wait a second, I am a genius. Then you go through that whole cycle once again until you're finally blown out of the market. It absolutely sucks. So if you're a new investor right now and you're doing well, first of all, fantastic job. But second of all, stay humble. You might be a market genius, but I would lean towards the safe side and assume that you're lucky and say, okay, I had a good run, but I better learn as much as I can so I can keep this money. Because making money is one thing and then keeping it is another. As long as you stay humble, you will be fine. Then, of course, we get to the market moving news when Buffett said he sold his entire stake in those airlines. So like I said, it's not manipulation, but you saw all these airline stocks drop 10% on that Buffett news. He said that the world has changed for airlines, and he doesn't know exactly how it's changed, but he hopes it corrects itself in a reasonably prompt way. And he doesn't know if Americans have now changed their habits already or will change their habits in the future because of this extended period that we're going through. He says he thinks there are certain industries, and unfortunately one of them is the airline industry, among others, that are really hurt by a forced shutdown, by events like this virus that are far beyond our control. So he had a stake of several $billions in United, American, Southwest, Delta. Well, he sold all of it. Airlines have always been a notoriously horrible business. Really tough to operate and really tough to stay profitable. I wonder at what point do we just nationalize the airlines? Is that a terrible idea? I haven't actually researched it that much. If you guys know what would happen if we did that, comment down below. But it's funny, I was watching an old episode of Family Matters with, Carl Winslow and Steve Urkel. Well, it was an airport episode and the ticket prices were ridiculous. It was still like $400 for a ticket. And it's weird because I don't think airline ticket prices have dropped all that much, even from so long ago. But what has dropped is the quality. Those seats keep getting smaller and smaller. I'm like 6'2", and I could barely fit in them. My knees are always touching the seat in front of me. So when does that change? Like, it's been so many years and we can't figure out a better technology or something. Again, I'm not some airline expert beyond the fact that I know that they go bankrupt all the time and they're very difficult to run. If you know, let me know down in the comments. Buffett basically admitted that he was wrong about airlines, but that it was an understandable mistake. When we bought airlines, we were getting an attractive amount for our money when investing across all those airlines. It turned out I was wrong about that business because of something that was not in any way the fault of 4 excellent CEOs. Believe me, no joy of being a CEO of an airline. That's for sure. That's what I was talking about. I don't know that 3 to 4 years from now, people will fly as many passenger miles as they did last year. You've got too many planes. So Buffett is teaching us a great lesson here about cutting your losses. Even Buffett, who's supposed to be holding forever, he knows when a deal goes bad and he needs to get out. And that's the problem in the market. It's very tempting to hold on to a loser, hoping and hoping and hoping that it's going to come back. And then you end up losing way more than you should have. But you always got to remember to cut your losses. And you always got to remember that you're never going to be completely right because you are working with not a full picture. You'll never have all the information. Even Warren Buffett, he said, it was an understandable mistake because this thing that we couldn't have predicted happened. And what he's talking about is unknown unknowns. Like in some cases, there are things that you won't know. And then in other cases, you have no idea the things that you don't know. Like no one could have predicted or even were thinking about, except maybe Bill Gates, that this virus would have caused all this panic and crashes and everything. So you need to make sure that your investment strategy has that built in. You got to have that risk control so that no matter what happens, you're going to be safe. Because again, you have no idea, no one does, what's coming down the line. Black swan events, all of that. You got to be prepared. Buffett also talked about how much he loves Jerry Powell. He said he always put Paul Volcker up in a special place, a special pedestal in terms of Federal Reserve chairmen over the years. But Jay Powell, in his view, belongs on that pedestal too, because of the way they acted in the middle of March. They saw what happened in 2008 and 2009 and took out that bazooka immediately. They reacted in a huge way that essentially allowed what's happened since that time to play out in the way that it has. And I completely agree here. The Fed has been great in their reaction. Now, whether you think they're doing the right thing or not, whether they're going to blow up our currency in the long term, who knows? But really, they only had one option, because if they didn't stimulate and pump all this money into the economy, we could have had a much worse outcome. I think we're still going to get this double bottom because I think this is just a bear market rally, but it's not going to be as bad as it could have been if we didn't have the support. Buffett talked about index funds too. He said, in my view, for most people, the best thing to do is owning the S&P 500 index fund. There's huge amounts of money people pay for advice they really don't need. If you bet on America and sustain that position for decades, you do far better than buying treasury securities or far better than following people who tell you what to invest in. That I agree with. Even though I'm talking about stocks all the time on this channel, the first thing I tell people is that, hey, why are you even spending time on this? Sure, you got to know the basics, but then once you know the basics, you should be able to find a good guy like a financial advisor to help you through this. Because the stock market isn't a game, it's like a professional activity that people dedicate their lives to. So unless you're truly dedicated to basically making this a career, what are you doing? Now that being said, if you have a small account and you get joy out of investing in companies and you have fun doing it, then by all means go ahead. But if you're taking your entire life savings into your hands and trying to do this part-time or basically half-ass it, then please just don't. Be the passive investor, put your money in the ETF, or find the right financial advisor to help you through this stuff. It's not a game. If you want to swing around serious money, then you got to get serious with what you're doing. You really got to learn. And there is no shame and nothing wrong with just having a smaller account and playing around because it is fun. I don't think there's anything wrong with treating the stock market like a casino. Like Dave Portnoy, Barstool's founder. He's having a great time in the market, swinging really big money, but he is making it into a game. Just don't do that with your life savings. Buffett also talked about how people should not be borrowing money to participate in this market. There is no need to be going on margin. And I hope people aren't doing that. We haven't seen it in the data yet, but normally when we do get into a bubble type scenario with a lot of froth, that's what starts happening. Like the Bitcoin bubble that we saw, people were buying Bitcoin with credit cards, taking on debt for Bitcoin. Whenever you see that type of thing start happening, you got to be careful because that's kind of a sign that you're close to the end, as in there's about to be a big crash. You should never ever be trading on margin or borrowing money to invest in the stock market unless you are a professional and you've been doing it for years and years. Otherwise, it's just a recipe for disaster. And probably the most important thing that Buffett said is just be careful, because he doesn't believe that anyone knows what the market is going to do tomorrow, next week, next month, or next year. He knows America is going to move forward over time, but he doesn't know for sure. And we learned it a few months ago in terms of the virus. Anything can happen in the market. You could bet on America, the long-term success of America, but you're going to have to be careful about how you do that betting, simply because markets can do anything. It's very important, like we were talking about before, to understand that you're not going to know everything that's happening in the market. Better yet, you have no idea what's going to happen ever. So if you have a strategy, that's why you have your risk control in place, so that you could guard your money and keep from losing it even when the unexpected happens. And anyone who tells you they know what's going to happen in the market, they're lying. Even when I say I think we're going to have a double bottom, that's what I'm guessing based off our team's research. We think that's the highly probable outcome, but we are fully prepared for if the market goes on to break new highs, because we know know that at the end of the day, we don't know. And based off our latest research, we actually think that this could be the start of the next move lower. And it's just funny of the timing of Buffett's shareholder meeting, because he could have just, launched it off a little faster. It would be funny if the turning point was that annual meeting. Now, Buffett gave some great advice in this shareholders meeting. But the thing is, when you look at guys like Buffett or any of the billionaires investing, you got to realize that you are not the same as them. Like, the game that they're playing is completely different than the game that the rest of us are playing, mainly because of their scale and then even their strategy. So just because Buffett sold all his airlines, does it mean that you should sell all your airline stocks? No, not necessarily. Just like you're not buying entire businesses like Buffett does. You don't have to follow every single little thing that he does because you don't have the same strategy. You're completely different. So it was interesting to see his thought process, but again, you got to have your own strategy and stick to that, because you're playing on a different time frame at a very different scale. If you want some good, solid investment advice, then look no further than the Fallible community's comments. For example, Isran, he said, dude, you need to find a ship to store the crude till you short a futures contract. All tanks are full and you cannot fill your bathtub unless I call Carnival and rent their ships to store it. See, this is the genius type of out of the box or even out of the barrel thinking that we need. Use all these cruise ships that no one's gonna go on anymore and store all this free oil. Or another great place to store oil is in all the abandoned WeWorks, or perhaps even SoftBank headquarters when they go under. Lots of good places to store oil. These are the plays that we need to be making. Mr. Canvas said oil is so cheap that AK is finally using it on his hair now. Yes, my hair is another great place to store oil. There's been a lot of controversy lately that I've cut my hair, as in there's been maybe 2 comments. And I know you guys really care about this, so I just want to set the record straight that no, I have not gotten any haircut. My hair is still just growing and growing. Before every video, I spend at least 30 minutes just talking my hair down. Like, please, hair, just stay down for a little bit for this video, and then you can fly all over the place, do whatever you want. And I spend all that time and it doesn't even look good. I'm coming to a point where I just can't control it anymore. I might just have to let it go, because I can't spend all this time on my hair for this result. I mean, I could be spending all that time just sitting there and doing nothing because we're under quarantine anyway, but I will not spend it on my hair. I might just let it go. You want to see what my hair actually looks like? That's my normal hair. You see this? This is a problem. So here's the thing, I could keep making videos with my hair like this, but I also bought a hat, which I might start wearing instead. And let me tell you right now, I'm not a big hat guy because I got a really big head, really big ears, and this hair, it barely fits under a hat. But I really wanted to support this local small business by where I live that sells hats and clothes and stuff. It's called Lululemon. I just wanted to do my part. So maybe I do that because I don't know. This is a lot, so I can't do this anymore. If you got any ideas, feel free to comment down below. Otherwise, I'm going with the hat. And if you want more genius investing ideas like the ones you just heard, check out the Explosive Stocks Checklist. It gives you all the tools you need to find your own stocks that are ready to explode higher. Free, link down below in the description and comments. Also, make sure you subscribe to this channel because we got a lot more information coming. You can see whether I wear a hat or not, because I know that's so interesting. But yeah, feel free to subscribe, and I'll see you in the next video. Stay fallible out there. Bye.